Hi everyone, and welcome to the weekly video for CMC Markets. This is Mish Schneider, Chief Strategist of MarketGauge.com, talking to you at the end of May here, or at least the last Tuesday of May, May 28th, 2024. And one announcement to make before we get going is this will be my last weekly video installment for CMC. It's been a wonderful run, and I've got to meet quite a few people through the years working with you all. And so, if anybody would like to stay in touch with me, you can find me on Twitter at Market Minute or simply email me at mish@marketgauge.com. So, now let's get started looking at here the NASDAQ cash futures chart. Once again, thank you, NVIDIA. That was up another 7.5%, really making this completely separate from so many other areas of the market as we talked about last week. But what is interesting is that the big bar that we had last week, which many were calling a bearish engulfing pattern, if you looked at it actually on other charts, you would have seen that, not so much on the cash. We now today, with the news of higher levels in NVIDIA, actually are challenging not only the high of where this closed on the last session, but getting close to challenging the high. So essentially, this is a doji day. What does a doji day mean? When the opening and the close are virtually at the same level. Generally, that's hesitancy or pause or uncertainty by traders. So what can we look at tomorrow? Well, let's just take that doji level of 18,880, we'll call, round off, and call that our pivotal area. Most simply, above, we look more bullish. Below, I wouldn't necessarily say bearish, but certainly maybe a little bit profit taking coming into the market. And from 1880, our next level of support that we would be watching would be really not too far lower than that, but in $80, 18,796. We can call it just simply 18,800. And then from there, things don't really start to look pretty dicey unless we break down under this low, which is at 18,560. And of course, should we hold this pivotal point of 18,880, then simply we have to look at this high right here at 18,940, and from there we could possibly go up to 19,000. Moving on to the very closely watched pair of USD Japanese yen. What we can see here is it's over that pivotal area we talked about last week at 156, trading and closing at 157.20, rounding up a little bit here, but also into a little bit of resistance of what we saw last week at the same level. And of course, you can see how we had resistance up to really, I would say, 158.38 with minus that one spike here that we had over 160. So nothing really changes here. What's interesting is that the dollar actually weakened in terms of just the US dollar on its own, trading down to around 104.60, but yet it still remains very powerful against the yen, which of course begs, does the Bank of Japan have to raise their rates? But for now, what we want to look at here is, since this was a high here, attempted high here, not quite making it here, and then again today, let's say 157.19 is the area. Above, we're going to look more bullish for the dollar. Below, maybe a little bit more cautious and more bullish for the yen. And we really need to now see what happens at that 156 before we say we're going to get any kind of major correction to possibly the 50. And if we get above, of course, we really are looking at resistance here anywhere between 157, let's even say 158, and then 158.40. Moving on to commodities, that was definitely, besides NVIDIA, where it's at. In fact, if you take a look at the charts, orange juice made another whopping new high today. Wheat's been flying. Not going to show you all those charts, but really, as this is the last time I'm with you, I want you to keep in your mind that one of the things we talked about over the last week was that oil would get back over $80 to $81 a barrel in cash. What would that do to inflation then? And so in this case, you can see what happened today, that we did get through the 200-day moving average. So tomorrow would have to be a confirmation day, which would mean another close or a second close in a row over 80.3 13, let's call it. And if that happens, you can see how this high today and this high from last week sort of match. We get through not only holding that, but today's highs of 80.56. Then, of course, here we are looking back at this 50-day moving average at 81.95, and then I think you'll start to see a lot more selling in the overall equities and even possibly in the supreme Nvidia, and maybe a lot more buying into some of the other commodities. I'm going to show you gold and silver, but even some of those softs, and even sugar that I've been telling you about, which hasn't quite gotten to that 19 cents a pound, but is certainly getting closer. That would be the start of what I would consider to be a super cycle of inflation. So one concept that we covered last week was the possibility that natural gas was just having a short covering rally or perhaps some bottom picking, and that the rally would not sustain. But instead, not only did we have a little bit of a sell-off, which kind of made that possible, but today we've gotten a bounce off of some pretty good support. And look at the support, because it is the high of the candle here and the low of the candle here. That's great when that happens. So here we are now looking at this area of 252.53 as the support, and it closed at 263. Also, interestingly enough, having an inside day because it did not quite take out the high at 264. So let's call 264 somewhat pivotal. I actually think that if we look at the high here and the high here of the bodies of the candle and then the actual low of the wick here, they all line up. So I'm going to look at this number at 265, just another cent difference, as pivotal. Above that, I would say most likely we're going to get a move back up to 270, maybe even higher, and maybe this isn't done and it needs to take another trip up to around 3. Below 265, then it's possible that this was just a little bit of buying coming in today, and now once we get underneath that 252, we'll be looking back again at the 50-day moving average at 240. Really, ideally, we do not want to see this break back down under the 50-day moving average. I would not consider that in a massive bear move like we've had in natural gas and a breakout, a healthy correction. I would consider that potentially a failure of this rally to hold. But perhaps the real star of the day, besides orange juice, is silver, which of course is back over $32 an ounce. And really, maybe we get a little bit of work done between 31.30 and 32.10. That would be a good range zone, but if it gets back over this area right here, I would think that this thing is going to ascend to a new high. Once again, it wouldn't be a new all-time high. It's been at $50 an ounce twice in at least the history that I know about. But nonetheless, if it gets up here and takes out this 32.50, then I would say your next stop really looks to me like it would be around $34, $35. As far as near-term pivotal points, I like this 31.50. Above, bias positive. Below, maybe we have to go back and revisit 30. Looking at gold, we already talked about this last week. It doesn't look as powerful as silver, but that is okay, because if silver is outperforming gold, that makes sense in a potential inflationary, if not stagflationary time. Now, also interesting is, remember, I just told you, lesson is check out, always go to the left and see where the bodies of these candles line up with other bodies of candles. So if we go to today's high, this low, what we're really seeing here is that this is our great pivotal point at 23.61 in gold cash futures. So above 23.61, I think we're going to probably want to revisit what happens here at 23.86, and then of course as we get through 2400 up around 2405, and below this 2360, I felt that 2350 was relatively pivotal, but I think a better spot to really be watching for is not only these lows here, but as this is an ascending 50-day moving average, what happens at around 2320. Under 2320, maybe we would have to have a little bit of a different story. So it'll be very interesting to see which way gold goes in the next couple of days. And we're going to end with a look at copper. There's a lot of talk about copper going much, much higher in the coming years because of its demand not only for AI and EVs, but also because it is undermined and has been undermined. And it takes a while for these mines to get back to producing enough copper to go around. It's also a very geopolitical metal, as in some countries control the mines completely, like in Chile. But nonetheless, getting away from the fundamental picture, looking at the technical picture, again, look how technically beautiful this was as it came rounding here. And then if you look at the body of the high of the candle this day and the lows these 3 days, they're all very much lined up. Really, let's call it somewhere around 471, 472. So keep that number in mind. As long as we hold 471, 472, it could chop around a little bit, but that would be actually a good sign of support. And then, of course, even though it closed today close to 485, to me, what would look like really would have to clear at this point to really prove that it's got more gusto would be 490. And then, of course, then we're looking back at 510. So going back to that level we were just talking about at 472, 473, under that, then I would be saying maybe 450 in a test of that 50-day moving average. Pretty fully convinced that we have a lot more movements in a lot of the different commodities going forward. I mentioned a few before. I'll also mention coffee as one at 229. I mean, these are just incredible prices. So it's looking for inflation in all the wrong places, trying to fit inflation narrative of a square peg into a round hole. Keep your eyes on commodities in the coming months and definitely next year. And in the meanwhile, again, thank you so much for allowing me this time over the last couple of years. I wish you all well and happy trading.